All right, let's dive into one of the most audacious, maybe even craziest transformations we've ever seen in corporate finance. This is the story of a company that didn't just dip its toes into Bitcoin, they jumped in head first. And then they completely reinvented their entire business around it. So, how on earth did they do it? It all starts with this number right here, 713,502. Now, this isn't some random number I pulled out of a hat, no. This represents one of the single biggest, most concentrated bets in corporate history. It's a massive bet on a totally new kind of money.
And that bet? Well, it was made by a company called Strategy. They now hold over 713,000 Bitcoin. Just to give you an idea of what we're talking about, that's tens of billions of dollars worth of a single digital asset just sitting on one company's balance sheet. It's wild. Okay, but here's where the scale of this thing gets truly mind-boggling. That huge pile of Bitcoin, it represents 3.4% of all Bitcoin that will ever exist. Think about that. A single company has managed to get its hands on over 3% of the entire finite supply of this global asset. But, this creates a huge problem, a fundamental challenge. How do you run a predictable business when your main asset is literally famous for its insane price swings? This was the volatility beast that Strategy absolutely had to tame.
And wow, this table just lays it all out there, doesn't it? Just look at their quarterly results. In one quarter, Q2 of 2025, they post a staggering $14 billion operating income. Fantastic. But then, just 2 quarters later, boom, a $17.4 billion loss. We're not talking about a dip in software sales here. This is the raw, direct financial whiplash from Bitcoin's price volatility.
So that brings us right to the billion-dollar question, maybe even trillion-dollar question. How in the world do you build a stable, predictable, income-generating business on a foundation that shifts so dramatically quarter to quarter? Well, their answer was pretty radical. They decided to stop just being a passive holder and instead become an active innovator. They went and built something they call the digital credit engine, a machine designed to solve this exact problem.
So what in the world is digital credit? Well, this is their secret sauce. It's their core invention. Basically, it's a whole new kind of financial product, and it's engineered to do one thing: take that massive, volatile pool of Bitcoin and completely transform it into something else, something stable that kicks off a high-yield income. And here's the first part of that magic trick. On the left, you've got the raw, unpredictable capital, all that Bitcoin. And then on the right, you have what they pull out of it: a clean, distilled, predictable yield. It's kind of like refining crude oil into high-octane gasoline. The second part of the transformation is all about taming that beast of volatility we talked about. They use some pretty clever financial engineering to create a product that aims for a steady, stable price target right around $100. They're literally stripping out the crazy price swings that are just part of Bitcoin's DNA. And the third piece of the puzzle, creating global liquidity. We're not talking about some obscure bond that only a few people can trade. No. They've created a product that's listed right on the NASDAQ. You can get it through major brokerages. They made it super easy for pretty much anyone to get access to it. And it all comes together in their flagship product, STRC. Just check out these specs. It targets an 11% effective yield. It's got that mechanism to keep the price stable at $100. It is heavily over-collateralized with a 5.6 times Bitcoin coverage rating, and it pays out dividends every single month. This right here, this is their masterstroke, their direct answer to that massive volatility problem. Now, a strategy this massive, this bold, it doesn't just happen in a vacuum, right? You'd be absolutely correct. It's been helped along by a pretty significant shift in the political climate, creating these powerful tailwinds for the whole company.
I mean, wow. You really can't get a clearer or louder signal than this. This is a direct quote from the official White House social media account. It's an explicit statement of the administration's goal: make America the global leader in Bitcoin. That's some serious top-down support.
And it's not just talk, right? It's backed up by the people they put in charge. From the very top with the president and vice president, all the way down to the heads of Treasury and the SEC, you're seeing a lineup of people who are publicly on board with Bitcoin and digital assets. This creates a very friendly regulatory environment to operate in. Okay, so they've engineered this brilliant solution to the volatility problem, and they've got these strong political winds at their back. But what's the ultimate goal?
Why go through all the trouble of building this incredibly complex financial machine just to create stable income?
Believe it or not, the objective is shockingly simple and laser-focused. Everything they do, from issuing this digital credit to managing their treasury, it's all designed to do one single thing: increase the amount of Bitcoin owned per share of their company. That's it.
And this chart says it all. The income they're generating from their digital credit engine isn't just for booking profits. No, it's fuel. It's used with intelligent leverage to go out and buy even more Bitcoin. Their stated goal is to nearly double the amount of Bitcoin behind every single share in just 7 years. They're not just holding Bitcoin anymore. They're running a machine that is built to get more of it faster and faster.
So, this brings us to the final critical question. By taking a famously volatile asset, transforming it into a stable, yield-bearing instrument, all for the purpose of acquiring more of that same volatile asset, has Strategy actually pioneered the future of corporate finance? Or have they just built the most elegant, most sophisticated, biggest gamble in history?